this machine? Can we catch fish with it?
Ah, Champak, you are such a kid. This is called as a rig. These are used to drill oil wells from which oil is taken out.
Oil is extracted? You mean petrol, diesel?
Well, yes, but before that, crude oil is extracted, then it is processed in a refinery. Do you know that these rigs has rent of around 35 to 36 lakh rupees per day?
35 to 36 lakhs rupees rent? Don't they buy these rigs?
Well, they rent it out. In fact, renting a rig is in itself a huge business.
I wish I also had a rig. I would have earned a lot.
Well, you may not be able to buy a rig. However, you can invest in such a company.
Really? Do tell me about such company.
Alright, so today I will tell you about one such company, and that is Jindal Drilling. The company Jindal Drilling, part of the Jindal Group, has been working in India's oil and gas sector for over 30 years, specifically in offshore drilling, which involves excavation in the deep sea away from the coast. This company operates in three main segments, namely offshore drilling, horizontal and directional drilling, and mud logging services. The oil and gas sector is one of the 8 core industries in India, and it has a significant impact on the country's other major economic sectors. Due to the rapid development of the economy, production is increasing in the country, which is leading to an increase in demand for both oil and gas production as well as transportation. According to the India Energy Outlook 2021, it is estimated that India's GDP will increase to $8.6 trillion by 2040. This is likely to result in a nearly twofold increase in energy demand to 1,123 million tons oil equivalent. MTOE refers to the amount of energy that is produced by burning 1 metric ton of crude oil. The International Energy Agency IEA predicts that due to the increasing infrastructure spending and environmentally friendly policies in India, the outlook for natural gas consumption during the medium term is quite strong. It is expected that industrial customers will account for 40% of total demand growth. Additionally, there is hope for growth in demand from sectors such as residential, transport, and energy.
I have understood about the benefits of JDL, but what about company's business?
Alright, sure. I will also tell you about the company's financial performance. The company's financial performance is very strong. In 9 months of FY23, earnings have increased 30% year-on-year, while operating profit, on the other hand, went up by more than 2 times. Similarly, the profit has also increased around 2 times year-on-year. JDIL has achieved an efficiency standard of nearly 100% for all its rigs. This is expected to increase both day rates and utilization, and the likelihood of a rebound in several important markets, and in some markets, rebound has already happened. As a result, there is increasing optimism for the global offshore drilling market in 2023. The term day rate refers to the total cost of renting a drilling rig for 1 day. For the first half of 2023, day rates for jackups in the Asia-Pacific region APAC are expected to range from $67,000 to $90,000. However, rates have recently climbed as high as $120,000. An increase in activity is expected in 2023, which will further drive up rates, particularly due to the limited supply of rigs. With projects such as those in the KG Basin and Sagar Samrat set to begin, ONGC's production in 2023 is also expected to increase. JDIL's charter rates vary for each of its rigs. The rates for 2 rigs, Discovery 1 and Jindal Star, are $25,000 to $26,000 per day. The rates for the other 3 rigs, namely Explorer, Virtue and Star, are $40,000 to $45,000 per day. The management of JDIL hopes that rig rates will increase to $55,000 to $57,000 in the next 1 to 2 years. The demand for oil is slowly increasing, but it will take some time for the supply of new rigs to recover. This will benefit most companies involved with oil rigs in the medium term. Business profits of companies like JDIL will increase because fixed costs will remain almost the same or increase slightly. But there is a possibility of a rapid increase in net per day charges during FY24 to FY26.
See, JDIL, that is Jindal Drilling and Industries, is a very established oil rig supplier to many companies like ONGC, GSPC, etc. Currently, it has got 6 jackup rigs, which are all given to ONGC for a period of 3 years. And what is important in this industry is that they have more than 30 years of experience in this business. All their rigs have always operated at 100% utilization. Now, the key triggers for Jindal Drilling are typically coming from the increase in day rates, because globally, oil rigs are not available that easily. There is a supply crunch, and that has benefited companies like Jindal Drilling. In fact, the company has said that they will be getting day rates of almost $75,000 to $80,000 per day from the current level of $50,000 a day. So FY24 and FY25, we will see a lot of operating leverage coming because of the rise in day rates. And secondly, most importantly, I would believe that with ONGC they have a very strong relationship. Possibly they could be giving one more oil rig to ONGC in the next 6 to 12 months. So these are the near-term triggers which are going to definitely see a lot of operating leverage coming into the financial numbers for Jindal Drilling.
Okay, I got it that the company's business is good. But what about its financial performance?
See, in every business there are a lot of risks. Let's look at them one by one.
See, the biggest challenge for JDL is basically they have only one customer, that is ONGC. So basically, any cancellation of contract or any possibility that in future the ONGC doesn't do business with them, so that is a kind of a big customer risk. And second is most of the business is revolving around the price of crude oil price and the appreciation of the dollar. Basically, if the dollar depreciates or if the crude oil prices come down significantly, then that is going to be a big problem and challenge for JDI.
Okay, all seems good. Can you tell me about share performance and targets given by experts?
Sure, why not? I will tell you about it.
The JDL is expected to report a profit of almost 115 to 20 crores for FY23. Previous year, they generated a profit of 64 crores, and for the first 9 months, company has already generated a profit after tax of 86 crores. We believe that FY24 and 25, we could see very strong numbers from the company because of the increase in day rates. Currently, stock is trading at just 6 times FY24 earnings and an EV to EBITDA of 4 times. So our sense is next 12 to 15 months, you can expect a price of 475, 480. So it definitely offers a very good risk reward for investors.
So Champak, did you get it? Today I have told you about one more hidden gem.
Yes, man, today I've understood about one more business. Also, I got one more stock for investment.